Hello, everyone. David Thurman from Mortgage Choice and Barrick. Thanks for joining us on this short and sharp market update. Let's get started. Okay, so our first topic is the increased speculation that the RBA will increase interest rates at some stage in 2022. There has been a lot of talk about interest rate rises over the last 3 to 4 months, and rightfully so. We've been sitting at historic lows as far as interest rates are concerned for the last 2 years. So it's likely that we'll start to see rates come up. So we shouldn't be surprised about that at all. The question is how fast the Reserve Bank will increase interest rates, and they still yet don't know. The Reserve Bank themselves came out last month and said that while they're expecting rate rises, they need to wait and see what happens with inflation and also salaries. If we start to get paid more as an average across the country, then it's likely interest rates will move up fairly quick. But I wouldn't buy into the doom and gloom that you see in the newspapers or online. There's a lot of sensationalized speculation about interest rates jumping up by 2% or 3% over the next 24 months, and I don't see that at all. So if you're concerned about interest rates, then definitely give us a call and we'll talk you through your options. Keep in mind also that fixed rates have jumped up significantly over the last 5 months. So it looks like they might be priced a little too high for most people. But again, still worth a discussion. With all the doom and gloom about interest rates and the predictions that rates will start to rise, it's interesting to see that a lot of banks have decreased their variable rates. So for example, a lot of the major lenders have decreased their rates by 0.5, 0.6%, not necessarily for existing clients, more for new clients coming in. But what that means for existing clients is that you can call up and say, hey, I noticed that you're offering new clients a lower interest rate. Why am I on such a high rate? And part of our service is to help do that for you. So if you are concerned about your interest rates, give us a call and we'll see if we can get you a discount. Inflation around the globe has been a concern for a couple of years now. The damage that COVID has done on the supply chain across the globe, the war in the Ukraine, there are a number of factors that have come into play when it comes to inflation, and it doesn't look like we're going to curtail that or slow that down anytime soon. So that's leading into the concern with interest rates, and it will be a wait and see approach, I guess, as to how concerned the Reserve Bank might be with inflation. They've advised that it's not as bad as some other countries, in particular America and countries in Europe are experiencing much higher inflation than we are. And so we'll just have to wait and see how bad that gets. The home loan market tends to go in cycles. And so we'll see this cycle where we've got a huge volume of investment loans that come through. And when investment loans drop off, then we start to see a lot of first home buyers and upgraders come into the market. And so as the property market starts to cool, we'll start to see more investors coming back into the market and trying to pick up bargains. And that's what we're starting to see now. And what most clients don't realize is that you can use the equity in your existing home to help purchase an investment property. So if that was something that you're considering, give us a call. We'll talk through the equity you've got in your house. And most clients don't realize how much values have increased over the last 3 to 4 years. So if you've had your home for 3 or 4 years and you haven't done a recent valuation, we can order one for you for free and see how much equity you might have to assist with that investment purchase. Now, this last topic is quite interesting. As you're all aware, the international borders have been closed for a couple of years now because of COVID. And as they start to loosen the reins on immigrants coming into the country, we'll start to see a greater demand for property, greater than what we've already experienced. And so there may well be an increased demand for units and for clients looking for investment properties. So while there is a little bit of talk that higher interest rates over the next 1 to 2 years might soften the property market, I actually see potentially a property market that might plateau for a period of time, but not necessarily go backwards, because we do have increased immigration to look forward to. So yeah, I guess time will tell on how that plays out, but we're certainly seeing an increased demand from investors. So that does it for our market update. Hopefully short and hopefully sharp. If you've got any questions about your particular scenario, please feel free to give me a ring. We love having a chat with our clients and helping educate them on making the best decisions possible. So look forward to hearing from you.